The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk taxes. And you know, if there's any questions you have, we want to help you with them. 803-0930, 803-0930, star 930 on a cell phone, and our text number is 716-803-0930. And, we are here at your service from EG Tax. And, of course, I'm joined in studio with Chris Fabian.
Hello, Esther.
Hello, Christopher. And, of course, Mrs. Fabian's taking the afternoon
there,
off.
Esther.
No, I don't think so. But your daughter's in town because there's going to be an engagement party tonight, right?
Yep.
So that's very nice. So I guess the mama of the bride is helping the bride with the engagement party.
Yes.
All right. But we're certainly here to talk taxes, and we want to kind of talk about things. I want to give you the wisdom behind what we say when we say to do something, and we don't have that much longer here. Let's face it. Tomorrow's November the 1st. Is tomorrow November? Monday's November the 1st. So you got 2 months left to make a change, and we don't know when the tax law changes are going to come into effect. As soon as they do, we'll let you know. I mean, right now, rather than making you crazy, I'm just going to wait to see what everybody comes up with in reconciliation. I know it's going to be bad when it comes down the pike. Right now, we don't know. But under the current tax law, these are things that you should do, right?
Right.
Oh, and by the way, we have our third school, starting mid-November.
That's right. Starting like November 13th-ish in West Seneca, Lockport, and in Tonawanda.
Right. So you can join us by registering online at egtax.com, and I think you'll be very smart if you take this class.
Right. Yeah, we teach you everything, A to Z. Stuff you want to know, stuff you don't want to know, and
Stuff you can't believe.
And I was just going to say stuff that will blow your mind away.
You know, I mean, like now think about this. Let's say you got a 1-year-old, a 5-year-old, and a 12-year-old, and you're working part-time, maybe single parent, making $18,000. Will that person pay any taxes, Chris?
No.
Okay. That person will get a credit for those 3 kids, money in the bank. They're going to mail them money of $10,200. And that person, if they're paying $1,000 a month in daycare, they're going to get half of it back, or another $6,000. And that person is going to get an earned income credit on the federal and state. So that person is going to get a refund of $24,600 plus plus $200 from the state of New York. So they'll get $24,800, and they didn't pay a dime in. And that's some of what we teach you, because it's important for you when they're talking about these things. I'm not saying it's not nice if you're that parent sitting home, but when you contribute nothing to the tax structure, and you're getting that kind of money, somebody's paying the bill.
Yeah. I
Right?
mean,
as a matter of fact, if this person that I'm just telling you about didn't work at all, that person would still get a $10,200 refund, and on the state of New York, $200 for $10,400. So if they didn't work at all, so
it's just
and so you wonder why nobody's working.
Yep.
Because
they're getting all this free
they're
money.
getting free money.
They're getting free money, and I said it before. When our loaf of bread starts going up $1 and the peanut butter goes up another $1 and, all that extra money people are getting, why is the prices going up? It's going out the window to pay for everything else.
That's right.
You're further behind than you were before
and you
all
just
these
feel,
changes.
you kind of feel, what can I do about it? I'm just one person,
Yep.
But, I guess that's where voting counts. So when everybody's talking about, we're going to defund the police, we're going to do this, we're going to do that, we're going to give all these people the money, there's only so much money, and when nobody wants to stay here anymore, then the well runs dry.
Yep. And I believe Tuesday is election day.
Right, for the city of Buffalo.
City of Buffalo.
Go vote.
Yep.
Go vote. All right. Mr. Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. I got a frog in my throat, and we're going to go to Jim in West Seneca. Hi, Jim.
Hi, Esther. I have a question about I-bonds.
Yeah.
If you buy them online, how do you have any proof that you purchased one?
You got to print out your receipt, and you put it in a book, and you tell your family, if I die, this book's very important.
Right. I mean, that is the problem with electronics. It's so easy to do the transaction, but when it says you want to print it, you need to print it.
Okay. And
And then the other thing is the bank. There was a bank deposit too. There would be a transfer from your bank account.
Yeah.
Right. And usually it'll say what the transaction was. I'd also print that with it.
Okay. And the next question: are I-bonds a good investment for? I'm retired.
Well, I mean, it's a safe investment, as safe as the good faith and credit of the United States government is. You know, it's paying terrible interest. It's tax-free on the state. You know, what can I say?
What interest rate are you getting on them?
What are you getting, like a 0.5%?
In the bank, I'm getting about 0.5%. I thought on the I-bonds, the last time I looked, it was a little over 3%.
No, they're not paying 3%, no.
Oh, okay, that must have been missed.
Yeah, you better take a look. But I'm going to tell you, there's nothing that's paying much at all in the wonderful world of banking and in the federal treasury. So make sure you know what you're getting before you get it.
Any suggestions of where I can put some of that money?
It's tough. There's just, I mean, the market is probably the best place you could. There's conservative investments in the market, and you might want to call the financial guys and see what they have to say. It's tough right now, but interest rates are going up, so you might want to hang on.
All right, thank you very much.
Thanks, Jim. All right.
So, yeah, you got to pay attention to your investments. You got to look to see what's the best course for you. I know we've had people all the time. Should I start moving my money out of the stock market because of the risk of the capital gains rates going up?
That's true.
We just don't know that answer.
As soon as we know, we will let you know. But we don't really, they are talking about rates going up, and myriad of other things, and making this credit that we just talked about permanent. Things that you want to do, though, and again, 8030930, 8030930, star 930 on a cell phone. Things that you need to do if you're working and you don't have a pension. Put your money in your pension plan, especially if you have a match. Why would that be true, Chris?
Free money.
That's right. That money that your employer's matching, maybe it's 2% of your salary up to what you put in. If you don't put money in your pension plan, you're actually giving up that investment.
Right. I mean, if they match the first $2,000, you put in $2,000, you just got $2,000 for free.
Right. That's right. And so the first thing I want to encourage you, got 2 more months. It saves you taxes. Right? Federal and state, and especially if you have an employer match, get it in there in the next 2 months. Why don't we quickly go to the phones? We'll talk to Tom. Hi, Tom. Hey, Tom.
So how you doing?
Good.
Good. What it is my daughter works at Buffalo General, and she pays $10 a day for parking. Did she put that on her taxes?
All right, Chris, give him the bad news.
I'm shaking my head, and it's not the direction you want to see.
Yeah.
Unfortunately, it's a no. First of all, they got rid of job expenses through work for regular employees. Second of all, parking at your first job is considered part of the commute, so it wouldn't even be deductible anyways.
Right. But if she had a second job and she were parking there on the state of New York, they would allow you to take it as an expense if you itemize. But if she can't itemize, it's just not going to work anyway.
All right. She told me the same thing you told me. I just wanted to...
Well, tell her she's right.
All right.
All right, Tom. Thank you. All right, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break. We'll be back on the other side.
We are family. I got all my
Hey, to us, you are family. And I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we just looked up the I-bond rate, and it says 3.4%, right?
It does.
But on a
the
30-year bond.
composite rate, and I'm just texted
So
Mike
for that
Lomas
first
to-
caller we had, check. You can call us on Monday. We'll get some clarification. But 3.4% would be remarkable, and especially because it's tax free on the state.
Right.
Okay. The other thing is, we were talking about things that you should do before the end of the year. Did you, as an employer, qualify for the employee retention credit? That is, a lot of people are talking about it now. We've been talking about that for a while. The employee retention credit is if your business was more than 25% down quarter to quarter during this COVID thing, you could have gotten a gigantic per employee credit on your 941s. And if you never have talked to your accountant about that, you want to make sure that if you walk through some tough stuff in your job, when you compare one quarter to the same quarter the year before, and it's down more than 25%, and you had employees, you could get a gigantic credit.
Right. I mean, it's incredible what we're trying to help these employers do who are trying to stay afloat during I almost said tax season, COVID season.
Right.
I mean, it's just.
I mean, it's basically like $27,000 maximum per employee, $27,000 or $28,000 for the year. I mean, if you have 10 employees, that's a lot of money. So you don't want to miss that. The other thing is check with your broker to see what kind of gains that you're carrying forward before the end of the year so that you can take a look at and strategize. Maybe some of you need to do estimated payments so you aren't penalized.
Right. Yep, I've gotten some of those calls. I just made some extra money this quarter. How much should I pay so I don't get penalized? Because they base it upon when the income comes in, and that's where that 2210 comes into play when you're doing your taxes.
And that helps to eliminate the gain, the tax,
yep. And if,
the penalty, excuse me.
Like a realtor right now
Right.
should probably be paying estimated taxes if they're selling the houses because with the prices people are paying, the commissions are going up. I think we'll see some very happy real estate.
Happy and sad.
Yeah.
Sad at tax time, but happy at their numbers on their 1099. But it's a pay-as-you-go system. So as you earn the money, you have to send that money into the federal and state. And there's a little exception. There's always exceptions to everything in tax law. But as you earn the money, you're supposed to send in an estimate. So if you're somebody that's self-employed or you have extraordinary income, such as from stocks and bonds and things of that nature, you want to make sure you call us so we can set you up on an estimate to get that money in so you aren't penalized.
Yep.
Right?
Yep.
Okay. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. The other thing is, if you have children, and maybe you're living on alimony and you really think you don't need a job and you have minor children under the age of 18 at home or if they're in college under age 24, you want to make sure you have a job because why, Chris?
Earned income credit. They changed the law. So it used to be single people with no children or married couples with no children. From 25 to 65, if your income qualifies, you got the EIC. Now they did it from 19 up to the day you die. As long as
you're
you have
working.
earned income, you possibly could get the earned income
So the
credit.
earned income credit is money they send you if you're under an income threshold, and with children, 3 children, it's like $50-some thousand. So it's not necessarily somebody poor, where they actually send you money that you didn't send them in to encourage you to work.
Right.
But I think the encouragement to work has been offset by money they're sending you now for not working. And that's interesting.
Yeah. It's crazy what they're doing.
But
and
here
you gotta-
here it is. Everybody's dying for help.
Yep.
And if you would like to give yourself, if you got kids at home and you maybe don't need to work, but you're living on alimony, which is completely tax free if it's a post 2019 a divorce. If you go get a job, you just maybe give yourself an extra $8,000 in refund. Right?
Yep.
Because of the earned income credit.
Yep.
And of course, get a job if you're a senior, like Chris was saying. You don't need children anymore. If you get a job and you're a senior and you're on a lower income level, because maybe you're just living on Social Security, if you get a job, they're going to give you an earned income credit.
Right.
But if you don't have a job, then you're not going to get it.
You could also take the money from your job and put it in an IRA.
Right.
Because there's no age limit on IRA contributions right now, too. You just have to have earned income.
Right. And so you can do that too. All right. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And we're going to go to Joe. Hi, Joe. How can we help you, sir?
Yeah, I was wondering, is it smart to get a second opinion on your tax returns?
Of course it is.
Yeah. I mean, what do you guys charge?
We don't charge anything.
Yeah, to get a second opinion? Okay.
No, there's no charge. I mean, all you have to do is you can email it to us, and then we'll call you on the phone, and we'll go over what was on the tax return, because all that's on the tax return is numbers. The important part is the interview. When we interview and we say, and this is especially important for people that have children, and you might be switching off who's claiming which children, things of that nature. Or did you get the retirement savers contribution credit? Or can you put money into an SEP? All of those kind of things can only be discovered if you do an interview. And that's what we would do when we look at your tax return.
All right, where's your closest office in Amherst, New York?
Well, our corporate office is the one that's open this time of year. We teach classes right now in our branch offices, but our corporate office is on Colvin Boulevard at 1890 Colvin, and we're open 9 to 5 Monday through Friday. And just give us a call. We'll make appointment. We'll give the ability for you to send over your tax return secure, and we'll take a look at it with your phone number and call you back.
All right, obviously you guys are more knowledgeable than a older gentleman. I think is not up on his.
Well, I mean, Joe, to be fair, the tax laws change like every 15 minutes, and we're waiting for the big one to come down here, and then we'll blow your minds. But it is it's daunting, the task of, especially last year's taxes with COVID and all of the stimulus stuff about who should claim the kids and whether your college-age kids should claim themselves. I mean, it was a lot of money, and you want to make sure that you didn't shoot yourself in the foot.
All right, well, I'll be calling your office after I get my taxes done.
All right, Joe. Well, let's look at last year's.
We can do that, too.
Oh, sure.
We can go back
we
to
can amend
18.
3 years.
Yep.
Yeah. All right, well,
All right.
I'll make an appointment.
All right, Joe.
Sounds good.
Thank you, sir.
Thank you.
And that's the truth. I mean, last year with COVID, all of the things with COVID, all the incentives for COVID, taking money out of your IRA or your pension fund, all of the people that might have had the opportunity to have that spread over 3 years and did it all last year, that's still available to them.
It is. And that's, some people who do it by themselves or do it in their basement. And I'm not making fun. I'm not, but they may not have stayed up to the law to understand that you could take it over 3 years.
Right. So let's say you're somebody that because of COVID, you were laid off in 2020 and you needed to take $50,000 out of your pension plan in order to get from June to December. They gave you an option of spreading out that $50,000 over a 3-year period, kind of like the old income averaging situation. If you paid all those taxes on that last year, then that's good, but you did have the right to spread it out over 3 years, and so we could technically amend that return, get you your money back, and get you set up for the second and third payment, which was all interest-free.
Right. Yep, interest-free. It's going to be penalty-free. I mean, so it could be a win-win. If you're a good budgeter and you can save for it, It would be a good thing.
Okay, so now we were talking about seniors putting money in an IRA, and I talk to seniors all the time, and they'll say to me, "Why should I put money in an IRA when I'm doing an RMD?"
Why not?
Right. Well, the whole thing is your RMD. It might be $3,000, but if you worked, you might be able to put $7,000 away in an IRA. So the more money you can set aside for your longevity. People are
Right.
living longer than ever.
And not to mention the taxability of Social Security. I mean, if you're a senior and you have to work and you're on Social Security and you have your RMD, part of your Social Security may be taxable, but by putting money in the IRA, it reduces your income, which would reduce the taxability of your Social Security. So it could save you a lot of money by doing that.
Right. Okay, I'm Esther Galius, the tax lady from EG Tax. Give us a call in studio, 803-0930, star 930 on a cell phone, and you can text us at 716-803-0930. We're going to take a short break for the news, and we'll be back on the other side with your questions.
We are family. I got all my sisters with me.
Hey, to us, you are family, and we certainly want to help you. We're getting ready for tax season. We're waiting for the federal government to change the tax laws again. And I don't think they're going to be, in many situations, there's going to be a lot of unhappy people. What can you do? But anything that's good, we'll tell you about. Anything that's bad, we're going to tell you about. We're going to tell you about the best way to handle it. And we're just waiting. I'm thinking by the end of this week, they should be coming up with something. So,
Well,
all right.
that's what we keep saying.
Yeah, well, that is true. But I mean, they really are getting close now.
Yeah.
803-0930, 803-0930, star 930 on a cell phone. You can text us at 716-803-0930. Okay, it's talking about required minimum distributions.
Do it. You got to
People
do it
have
this
to
year.
do it.
Yep.
So if you're over the age of, if you're 72 or older, you must take money out of your pensions, annuities, IRAs, unless they're Roths. And if you don't, there's a gigantic penalty
Yeah. 50%.
of the money you didn't take out.
Yep.
So if you're listening, take money out of your RMD. Now, there's a way around that, and we've talked about it before. It's called the charitable rollover in your IRA. So it's got to go from your IRA provider or your pension or annuity provider directly to a charity. So let's say that you save up all the money that you give to charity during the year, and let's say maybe it's $2,000. If you do a direct rollover from your IRA, actually, it's got to be IRA to the charity, then it's completely it's going to be tax free,
Right.
and you fulfill your RMD requirement.
Yeah. It's a nice tool that people can do, but we just talked about seniors still working. Well, if you have your 401k and you're still working, contribute to it if you're over 72.
That's true.
Because if it's an active plan you're contributing to, you don't have to take your RMD out.
That's true.
So
Out of that plan.
Out of that plan.
Right.
Right.
But if you have other plans, you got to take it out.
Right. But still.
All right. Then the other thing is interest rates are low. I mean, and they're going up. Interest rates are going up. So if you're somebody with a home and your interest rate is over 4%, 5%, look at refinancing. And especially now we have Christmas coming and the holiday season and people need money. Where are people tempted to take money out of?
Their pensions and IRAs.
Right. And is that a good idea?
No, it's
not at all. Especially if you're under the age of 59 and a half.
Right.
Because why?
That 10% penalty.
Right. And it's fully taxable.
And it's fully taxable on both the federal and
the
New York
state.
State.
Right.
So if you're in the 22% bracket, you take $10,000 out. Well, you're going to pay 22% plus the 10%. That's 32 plus
the
New York State. So you're looking about 38 to 39% out of 10,000. So you just lost $4,000.
Right. And so you say to yourself, what would you're trying to save interest on credit cards maybe, and you just you just cost yourself almost 40%.
Yeah.
So that's horrible. So you want to make sure that if you are a homeowner and you have a lot of equity in your house, or you have a very high interest rate on your mortgage, not even very high, maybe 5%, look at refinancing, because you'll be able to take money out at a very low rate.
Right. Or not even just take money out. You could take the money
Right.
out, but the money you save on your mortgage payment could go to your credit cards.
Right. That's true. Or you could trim your years on your mortgage
Yep.
from 30 to 15.
Yep.
So, okay, we got what do we got here?
Hey guys, I've been selling and buying cryptocurrency in an app called Coinbase. How is that treated at tax time? Thanks a ton, Joe in Buffalo.
Well,
Well,
it's first of all, every trade is considered a capital gain or loss.
it's a stock sale.
Right.
Basically.
So usually, every one I've seen, they give you a long sheet that's kept track of your basis, your buys and sells. So that's going to be either a long or short term capital gain, and you have to keep track of that. If it's a short term capital gain, it's going to be taxed as ordinary income.
Right. And one thing we don't hear it talked about with cryptocurrency is wash sales. On a stock, you sell that stock for a loss, you buy it back within 30 days.
Right.
You can't take a loss.
Right.
I would assume, and I know what happens when you
Right.
assume, but the same rules would apply.
Well, it's a capital asset,
Right.
so yeah.
So, and I could see a lot of wash sales out there with
So
crypto.
what you're saying, and you're not talking about doing laundry. You're saying, okay, so I had a cryptocurrency that I paid $1,000 for, and I just sold it for $800, and
Right.
so you have a $200 loss, but you buy it back tomorrow,
At $500.
right? And so that's not deductible.
Right.
It just adjusts the basis
This-
of that cryptocurrency. The real challenge, and I think the IRS is dealing with this now, is keeping track of accurate basis.
Yep.
Because it's so fluid right now.
Yep. So it fluctuates so much.
And for those of you that have businesses and you're taking cryptocurrency as payment, then that's not considered a capital asset. That's just considered cash.
That's cash.
And so whatever you sold that for, that's what it's
Or
considered.
if you use your cryptocurrency to buy stuff, that's still considered a business.
Right.
And that you would have to pay self-employment on that purchase. So if you bought a laptop with your
For your business.
not even your business, for your home, and you bought a laptop, that cost of that laptop is going to cost you self-employment tax, because that they say you use it to buy stuff, it counts as income.
So you have to
as
be,
a Schedule
and so you
C.
have to absolutely keep track of your basis.
Yep.
That ought to be interesting. But anyway, all right, now we got another one here.
Can you take your RMD and put it right back in?
No, it's a required minimum distribution. You must take it out, and you could put it into another investment,
Yep.
but you can't put it in another tax sheltered investment like an annuity or an IRA. So when you have an RMD, you have to take it, and you got to keep it out of an IRA or an annuity. You can then put it into another investment,
Yes.
right?
Yes.
Okay. Master Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Our text number is 716-8030930. And then the other thing is, we talked about taking money out of your pension, but if you needed money out of you're really tempted to take money out of your pension, you can borrow against it, right?
Right. Nowadays, you can borrow. You got to ask your administrator what's the limit you can borrow and how many loans. Like with New York State, I believe you can only have 2 loans out there. If you take your 3rd loan, then it counts as income.
Right. Well, here's the thing. When you do, you have to pay it back within 5 years, and you're paying yourself the interest.
Right.
So, and it's not taxable. So let's say you needed $30,000 and you're tempted to take it out of your pension plan. If you do and you're under the age of 59 and a half, like we just talked about with Chris, you're going to pay about 40% in taxes. But if you borrow the money, then you can pay yourself back over a 5-year period, and it's not taxable.
Yeah.
So that's a great plan.
It's a huge savings plan. Yes.
Okay. Then the other thing is, if you have good credit, you can borrow money at 0% on credit cards. Some credit cards are 2 years out with 0% on balance transfers and maybe 1 year on just new charges. And that's another thing you should look at.
Right, right. And, if you do that, cut up the old credit cards so you don't get into more trouble.
More debt.
Because how many people out there, I just paid off all my debt, but I kept, with this other loan, but now I'm charging all again on all these other cards. You're defeating the purpose.
Right. Well, I mean, it's like anything. Money is such a strange bedfellow because we all need it to live on, and nobody likes to tell themselves no,
Right.
much less your children. You try telling your children no. And so we get into, we don't mean to, but we end up in sometimes a financial mess. And the only way you can straighten it out is to look at it objectively
Right.
and figure out a plan. And that's something we do for people as well.
Yes, that is correct.
You can call us and we'll help you to do a budget. I know that's a bad word,
B
budget.
word.
Yeah, but we do. All right. I'm going to clear my throat. Sell your losing stocks.
Yep. Sell your losing stocks. We just talked about wash sales. Make sure you buy them. If you're going to buy them back, buy them within 31 days.
Right. So a lot of people are tied to their losing stocks, and they say, I'm losing money on it, so I want to keep it. But if you sell it and buy it back within 31 days, right, you get the loss and it's a win-win.
Right. But the thing is, too, also look at your portfolio. You may have a big winner out there, and you're like, I can't sell it. I'm going to get killed. But you might have 4 losers
That'll offset that
will
gain.
offset the gain, so you could sell them all.
So you need to take a look.
Yep.
You need to take a look. And this is very important, especially for divorced situations. Who claims the kids? Why is it so important now?
Well, you got this new child tax credit, which, like we said in the beginning, $3,600 for children under 6, and $3,000 for children from 6 to and including age 17, as long as your income is under $150 married joint, $75,000 single. So, and you don't have to work to get it. So, maybe the one. We'll say the mother is at home with the children. She doesn't work because she cares for the children. She's now, like you said earlier, if there are 3 children under 6 years old, she's going to get $10,800 as a refund for not working.
Right.
So is she going to go, well, gee, Bobby, I don't think I'm going to sign that 8332 this year to give you permission.
Because she wants the money.
I want the money.
Right. And I will tell you, before you cavalierly, just like are using old tax law and say, well, that's the way it was set up, you really got to talk to somebody because those kids are worth a lot of money.
Yes, they are. And it's very tricky, like you said, with divorces, with, kids in college, and you got to look at your income this year too, because maybe last year your income was under 150 because of unemployment. Well, now you're back to work and your income's over 200,000 or over the 150. Your child tax credit reverts back
to the original
$2,000 credit. So where you're used to getting that $2,000 credit on your tax return, if you got 6 months of $250, that's $1,500.
You mean what they were sending in advance?
What they're sending
right,
in
and
advance.
that means it could really mess up your taxes.
Right.
Because you won't get that $2,000
You'll
credit.
only
They gave you the money up front.
$500 credit left. So,
and again, these are all things we want to have you think about, because in 2 months you have to pay the piper, especially people that have shifted off those pension distributions. You got the second and third year looking at you in the face. Okay, I'm Esther Gilius, the tax lady. 8030930, 8030930, star 930 on a cell phone. We're going to be back on the other side. We're going to take a short break.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout.
Hey, we are hoping them bills come back on a rebound, right, Chris?
Right. They're gonna. I believe they're gonna squish the fish.
I'll tell you, we squished them the last time. I hope
We
they
did.
don't have revenge. I'm Esther Gillius, the tax lady. 8030930, 8030930, star 930 on your cell phone. 716-8030930 is our text number. We want to talk to you. We got.
Oh, I was going to
Go
say,
on.
funny story for listeners. We were at breakfast today with somebody, and we were telling them how bad the IRS is behind, and they go, "Oh, well, we just won't pay our tax bill next year." We said,
and see how they like that.
Yeah, we said, well, no, if you owe them money, they're very quick to send out the dunning notices, and they're like, what's a dunning notice?
Yeah.
We said, they're going to seize your bank account.
Yep.
It's when they owe you money, they're dragging their
Right,
feet.
and a couple
which-
weeks ago, they were 10 million returns behind in processing, and that kind of goes with our tax rate.
It does. Will the new tax changes affect my 2020 tax refund that has yet to be sent to me?
All right, well, and like they said, they are far, far behind. If the reason you haven't gotten your refund is because you sent it in paper, I'd suggest you get it done electronically. Or is it too late now? Have they shut down?
No, not till like December.
Yeah, so come in. We'll do it electronically, and you should get your refund shortly. But I also was talking to somebody yesterday who said he still hasn't gotten the adjustment for the second $10,200 on the unemployment, and that's
Right.
And so it's going to take some time to straighten all of this out.
Yep.
And patience.
I mean, if this is your initial refund, I'd call them. Call us. We'll try to get in touch. Make sure they do have it in their system.
Yep.
I mean, because with 95% of the workforce working from home, it could be sitting somewhere waiting to be
Maybe the
scanned.
dog ate it.
Yeah, there you go.
Right?
Yeah.
All right. Education credits, kids back in school. Unlike last year, where your kids might have been getting unemployment this year, probably the parents should claim the education credit for the American Opportunity Tax Credit for the first 4 years of college, unless the kid made a whole bunch of money, because it's a gigantic credit on the federal and New York State.
Yep.
Daycare providers, don't be surprised that the kids' parents are going to ask for your Social Security number or EIN number. Maybe in the past you said, oh, it's got to be cash. Well, this year the credit is 50% of what they pay you.
And it's refundable.
And it's refundable. So daycare providers, if you need help to get ready so that you can file your Schedule C, if you haven't been doing it, when you take everything that's you're entitled to, you're going to find out that you really have a large deduction for being a daycare provider, especially if the kids are in your home, because they have an office at home, right?
Right. I mean, that's, and you got to be, and the big thing too is you got to work. You got to look for work, or you got to be a full-time student to get the child care credit.
Right.
And so,
you got to pay a daycare provider.
Right, and you got to pay. So if you're at home collecting unemployment and you just want a couple days off and you're sending your kids to child care, that doesn't count.
Right. But if you're in college, it counts.
If you're in
Or
college,
if your
it counts.
spouse
Yep.
is disabled, it
Yep.
counts, right?
Yep.
But the new credit is 50% of the first $8,000 you pay for daycare for one child, and 50% of the next $16,000 you pay for daycare up to $8,000. So it's a gigantic refundable credit.
Yeah,
Right?
it's huge.
And so daycare providers, I'm going to tell you, mom and dad, in most situations, if the parents pay the daycare providers taxes, they'll still make out.
Yeah, right after the expense. So if you're paying grandma to watch your baby,
Right.
and grandma's watching the baby in her house,
And you have proof.
you can say you pay her. She claims
Because you
it.
do pay her.
You do pay her. She puts it on a Schedule C, but then she backs off the diapers, the wipes, the food,
The travel.
the entertainment, the
insurance.
toys, the cribs,
The office and home.
Yep. And so even if grandma has to pay $300 to the IRS because of it,
And you pay grandma's $300.
right, you're still up $3,700.
Right. I mean, hello. And that's money they're sending to you. So very, very big change, big change. Okay, other big change is if you have a business and it's a C Corp, you're paying 21% flat rate. Let's say your net profit on your C Corp is $30,000. If that were on an S Corp, you would just transfer that to your personal return. And if you're in the 10% bracket, you would only pay $3,000 in taxes. Because the minimum tax on a C Corp is 21% right now, moving to 28%, you are really shooting yourself in the foot. Plus, it's double taxation.
Right, because the double taxation comes into play. You pay tax on that $30,000 profit, and you say, well, wait, that's my money. I'm writing myself a check for that.
For the dividend.
That counts as a dividend. Oh, wait, dividends are taxable on the personal side and not deductible to the corporation. So the corporation's paying tax on that $30,000, and now your personal side, you're paying tax on that same $30,000.
And the thing is, if you're in the 10% bracket, for instance, if you're in the 10%, you're paying. If you had transferred it over on an 1120S, you'd only be paying $3,000 in taxes. But at 21%, you're paying more than double, plus the dividends are taxable again. So if you have a C Corp, look at changing to an S Corp. How hard is it to do that?
2 forms.
2553?
And a CT6. Yep.
And you will be a happy person.
That's right. That's right.
All right. And then, of course, the marriage penalty. I know people think that if you're married filing a joint return that you save money in taxes. That really isn't the case, is it?
Not anymore. Not anymore. It's there's so much into this. The SALT, a married couple gets $10,000. 2 single people get $10,000 plus $10,000. They get $20,000. Married filing separate, you only get $5,000 per return for a total of 10. So it's.
I mean, that's just one example. It's all through the tax law. 2 singles living together in sin pay less taxes than if they got married.
Maybe we should talk about that next week.
Should we preach on it?
Yeah, we'll preach next week on the marriage penalty because there's so much.
All right, let's go to Catherine. Hi, Catherine. How can we help you? Hello?
Hi. I'm wondering if all these people who are working from home, can they claim the tax credit, the home office tax credit?
If you're an employee, no. Except for New York State, you can claim it on New York State if you can itemize. If you are self-employed, yes.
So only self-employed.
That's correct.
On the federal.
Federal.
But the whole thing is, too, Catherine, you got to make sure you have a room solely and exclusively used for your office. It can't be a bedroom. It can't be your dining room. It can't be your living room.
Well, it can be a bedroom that's used exclusively.
Converted.
Right.
But it can't have a bed in it and a desk.
Right.
Okay.
That's if you're self-employed. Now, a daycare provider, that's what we were talking about, they are self-employed. And they actually end up getting a percentage of their entire house because the little rugrats are running all around the house, right? So they get a percentage of the total use of their house based upon hourly to total hours in a year. So they get the office and home for the entire house times that percentage. But if you're an employee, no.
Okay. Thanks for your help.
You're welcome. And that's a big, that's a big thing that all these people are working out of their house.
Yep.
They're paying their own internet.
Yep.
They got their own computers. They got their own desks. And as an employee, they get nothing.
Yeah. Yep. They save $10 a day in parking.
Yeah.
Going back to that caller. But
absolutely correct.
Yeah, and I know, people are getting very spoiled working from home.
Yeah, I just talked to a couple today that said we may quit if they make us go back to the office.
Yeah,
right?
I mean, that's bizarre.
She says, "Do you know what it's like to have to put your makeup on and go to work?" And I said, "Yes, I do that every day." Well, it's really nice walking around the house and you don't have to put your makeup on. So it is true. With the shortage of employees, this just exacerbates it,
Yeah. I know I just did somebody who works for a big insurance company, and they said they're expecting in January when they have to go back, that half the workforce is going to quit because they don't want to go back.
Yeah.
I mean, I'd never heard of anything so bizarre in my life.
But if you have kids at home and they're sending you $1,000 a
Yep.
month for your kids, you don't need it so much, right?
Yep.
And I'm sure people are working under the table, and we won't even talk about that, right?
Under the table?
Yes, you know how that goes. All right, so during the week, if you have any questions, and I will tell you, as soon as they change the tax law, you can look on our website. We'll have it broken down into simple language. As soon as we find out, we'll let you know what the tax law changes are. Remember, the state of New York and federal government are decoupled. So what isn't deductible on the federal many times is deductible on the state. And sometimes stuff that's deductible on the state is not deductible on the federal.
Just like the $4,000 child care credit per child. That's a federal. New York State, it's still based upon $3,000, the old law,
Right.
where at a max of 20%, depending on your income, 20 to 35%. So those are two different laws.
Right.
You know, like that gentleman who said, should I do a second look? That's one reason,
Yep.
you know, because how they are decoupled.
Right. I mean, that's the state of New York. And of course, one of the things that people always do wrong is the pension exclusion. If you are a retired New York State, federal, or county, city employee, if you're retired on a public pension, your pension on New York State is fully tax-free. Once you reach age 59 and a half, if you're in a private pension, IRA, the first $20,000 that you get is tax-free for you and your spouse. So many people are still taxing themselves on their pension, and it's not taxable at all.
Right.
In many cases.
Yep.
Okay. Hopefully next week my frog will be gone. I'm Esther Gullius, the tax lady. Our website is egtax.com. If you need us during the week, you can call us at 632-7886. Until next week, I'm Esther Gullius, Christopher Fabian, and the frog. Talk to you
Ribbit.
later. Bye-bye.